Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your broker's account open so you can follow along. Have a calculator ready so we can do some easy math. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. And remember, this is not financial advice. This is all for entertainment purposes only. All right, let's get into it and check our open positions. SPY is up again today. We're getting murdered. We're short calls on everything. Micron is doing well today, though, so that's good. Boeing, we're down 34 bucks on this one. All of these are December expirations, so we've got about 30 days till expiration. We got plenty of time left to have things play out in our favor. Not worried yet. And if worst comes to worst, we can roll everything to January. Okay? Microsoft, same thing. We're down 50 on that one. Our SPY position is down 115. Roku, down 94. And Micron is green today. Our position is green because Micron is down. So let's look for some new positions to open, okay? First up today is Target, TGT. Up big today, post-earnings move. Could hit some resistance here. On the call side, we're still trading December expiration. How far is January? January, 65 days. So maybe another week or so for December expiration. On the call side, selling the 140 is awfully close. If you sold the 140 and bought the 145, what do you get? That's 134 minus 58 divided by 2. Divide that by 500. 7.6%. The strike is awfully close, though. Where's the 140 on the chart? 140 is right about here. Maybe we'll wait a day or so. We'll check in with this one. We'll put it on the list to follow up on. It's a little too close for right now. Okay. Let's look at the put side first before we move on. If you sold the 120, bought the 115, 90 minus 45 divided by 2 divided by 500, only 4.5%. So skip the put side. If anything, sell the call side, which makes sense. It's up 18%. Next is TJX, also post-earnings move, down a little over 3.5%. This one doesn't look so bad. Let's look at the put side on TJX. Not crazy about the 85. It is awfully close to 89. 55 minus 20. Actually, no, if we sold the 85 and bought the 80, that's 55 minus 16 divided by 2 divided by 500. Not even 4%. So skip the put side on that one. The call side. Skip the call side. You're not going to make anything. All right, next, moving on. Let's look at some of the Chinese stocks. They're all up big today. Baidu first, BIDU. This is up 3%. I think there was some overnight news out of China. On the put side, if you sold You sold the 100, bought the 95. That's 148 minus 80 divided by 2 divided by 500. 6.8%. We'll keep an eye on this one. On the call side, if you sold the 130 and bought the 135, that's 137 minus 82 divided by 2 divided by 500. Only 5%. I'll keep an eye on the put side of Baidu. Next, we'll go to JD. Actually, earnings. Is this post earnings? Never mind. We're going to take Baidu off the list. Earnings are on the 21st. Too close to earnings, we'll follow up after earnings and see if there's a move to make. Always check to see when earnings are first. JD. Earnings are on the 15th. That was today. Perfect. Down in the dumpster here. All right. On the put side, if you sold the 25 and bought the 22.5, a $250 spread. 25 minus 9 divided by 2 divided by 250, 3.2. Skip the put side. On the call side, if you sold the 32.5 and bought the 35, that's 28 minus 10 divided by 2 divided by 250. Same thing. We're going to skip this one. Pinduoduo, PDD. Earnings are the 27th. Let's move on. Alibaba. Earnings are tomorrow before the open, so we'll follow up with Alibaba tomorrow morning to see how their earnings went. Next is Affirm. Up 4% today. I think they rang the bell today as well. Earnings are February. Great. Not a great looking chart. A couple days here after earnings. On the call side, if you sold the 32.5 and bought the 37.5, what do you get? 55 minus 16 divided by 2 divided by 500. Only 4% there. On the put side, I'd skip the put side. 22.5 is too close to sell, and the 20 is too far out to sell to get paid. Moving on. Netflix. What was the news today? Upgrade, maybe? I don't know. There's some news. Earnings are January 18th. Big gap up after earnings and this continual movement up. Let's look at the call side. If you sold the 490 and bought the 495, that's 347 minus 273 divided by 2 and divided by 500, 7.4. So we'll keep Netflix on the list here. The put side, if you're interested. If you sold the 425 and bought the 420, that's 322 minus 259 divided by 2 divided by 500, 6.3%. So the call side's better. The put side's not bad, though, if you were biased towards the put side. Okay, interesting. Let's move on. Raytheon, I think there was an article out about them this morning. Doesn't seem like there's a lot of movement. Earnings are in January. No bias here. Skip the put side. Skip the call side. Not enough volatility on this one. Next, Upstart. Up 4.5%. Earnings are in February, so far so good. You traded Upstart before, way back here somewhere, back in August, I believe. Maybe look to the call side. If you sold the 32.5 and bought the 37.5, 64 minus 23 divided by 2 divided by 500, 4% only on the call side, not worth it. On the put side, if you sold the 20, if you sold the 20 and bought the 15, 32 minus 4 divided by 2 divided by 500, horrible. 2.8%, so skip the put side. I thought there'd be more volatility here. According to my platform, it says it's IV rank of 0. I don't know if that's right, but moving on, DraftKings, DKNG. This thing's on fire. Earnings are February 15th. Nice. Gap up and big movement after earnings and continual move up. Could get some resistance at 40. Anywhere between 40 and 45. Oh boy, you'd have to go all the way out and sell the 43 on the call side. Let's look at January really quick. Are there more strikes in way more strikes in January? We're 65 days out. That's a little far out. You'd have to sell the 43 and buy the 45. 35 minus 16 divided by 2 divided by 200. You only get paid 4.7%. On the put side, though, if you sold the 33 and bought the 30, that's 35 minus 13 divided by 2 divided by 300. Only 3.6% on the put side. So pass on this one. Close on this one. Next, Advanced Auto Parts, AAP. Post earnings, maybe? Let me check. Earnings are the 15th before the open. That was today. Upcoming lawsuits. Okay, good. Yikes. So it looks like it opened down as rallied back. Where is the low? It's past its pandemic low. Let's just look at the options. On the call side, 65 is too close. 70 is too far out on the call side. On the put side, if you sold the 50 and bought the... too illiquid. Not enough volume here. Next, moving on. VF Corp. Whoa, up 14.5% today. Earnings. Upgrade at JP Morgan. Upgrades. It's post earnings. Just a bunch of upgrades. Interesting. On the call side, yikes, too close. The 20's too close to sell. The put side, you have to sell the 15, but there's nothing to buy down here. Too illiquid. Next, close. Ralph Lauren. Earnings are in February. About a week here after earnings. This one's kind of in no man's land here. So, if you sold the call side, never mind. There's no volume here. Same thing on the put side. Very little volume. We'll move on. Datadog, DDOG. Earnings are February. This thing's been up a lot. Post earnings, gap up and continual movement up. Could catch a little resistance around 115 or so. Let's look at the call side here. For December, the same thing. 120 is too close. If you sold the 125 and bought the 130, do you get paid? 79 minus 38 divided by 2 divided by 500, only 4.1%. I wish there was a strike closer. That's what we really need here. On the put side, if you sold the 100 and bought the 95, so 104 minus 50 divided by 2 divided by 500, about 5% there. So not that great. What about January? January, if you'd sold the 130 and bought the 135, it's 57 divided by 2 divided by 500, only 5% for January, and we've got 65 days to hold it. Not quite there yet. Okay, finally Disney. I think there is an activist investor group come in today because we're post earnings. Could catch a ceiling around 96. If you sold the 100, bought the 105, that's 59 minus 22 divided by 2 divided by 500, 3%, 3.7%, no good. And skip the put side. You have to sell the 85, but you don't get paid for it. All right, let's revisit Uber from yesterday, UBER. Past earnings. Same thing with this one, continued March higher. On the call side, you'd have to sell the 60 and buy the 65. 44 minus 10. Divided by 2, divided by 500, 3.4%. Skip on this one. Skip the put side too. Coinbase. February earnings. Trying to sell the call side on this one as well. Let's see, if you sold at 120 and bought the 125, that's 202 minus 149 divided by 2 divided by 500, only 5.3% on the call side. Where's 120 on the chart? $120's all the way up here. How are you calculating the change percentage compared to the premium paid? How are you calculating the change percentage compared to the premium paid? Well, here's what I'm doing. The percentage is coming from your return on investment, sort of. So let's take a look at Coinbase. So if you sold the 120 and bought the 125, between these two, your max loss is $500, and it's $500 minus the premium. So for example, if you took 213 minus the 156, you would receive $57 in premium. So your max loss is $500 minus 57. 500 minus 57. Your max loss is $443. So pretend you're investing $443 in the spread, and I'm always trying to collect half, so 57 divided by 2, you take that number and then divide it by 500, or specifically 443, and that's your return on investment. So the premium paid is 57, and the percentage is half of the premium is what I want to exit the position at, and that's your take that that half, like 57 divided by 2. That $28 would be the return on investment. Okay? Thank you, Arthur. Back to Coinbase. I still think we're gonna wait. We're gonna keep this on the list. We'll keep following up with Coinbase. Home Depot next. Day 2 after earnings, still up, not by much though. On the call side, you'd have to sell the 320 and buy the 325. That's 105 minus 52 divided by 2 divided by 500. 5.3% on that one. Where's 320 on the chart? 320 is right about here. We're getting close. We're going to keep Home Depot on this list. If it can continue to move higher, I'd rather sell a call spread once it gets to 320. So hopefully this movement can continue. If it does, great. Then we can open something on the call side. If it doesn't, well then we missed it. But that's okay. On the put side, I don't know if I'd want to sell the put side here. You'd have to sell the 290 and buy the 285. That's 154 minus 99 divided by 2 divided by 500. Only 5.5%. Let's move on. XPO. XOP, right? Oil. Moving up again. Let's take a look at ExxonMobil instead. Did catch a bounce here. Let's look at the put side on ExxonMobil. Nothing. Not a lot of volatility in the oils anymore. I'm going to take XOP off the list. We won't follow up on it unless there's more volatility in the energy sector, okay? All right, cool. Let's go to our IV rank scanner. We'll sort by volume. Not a lot of IV anywhere. Not a lot of high IV ranks. That's making things a little bit more challenging. The Russell 2000, I know that was up big yesterday. Let's take a look. IWM. Nice. So 2 big up days on the IWM. This is the Russell 2000 small cap ETF. It's coming up to the 200 day as well, so maybe now is the time to sell a call spread on this one. For December expiration, if you sold the 192, 193, let's see. Sell the 192 and buy the 197. What do you get? That's 128 minus 64 divided by 2 divided by 500. 6.4%. Now that's interesting. 192 on the chart. $192 is up here. It's very fairly priced. We're already short the SPY, and we're getting murdered on it. We're short calls on everything. It's just there's nothing good on the put side to sell. 192. What if we sold the 193? It's going to be a little bit less. 193, 198. 112 minus 55 divided by 2 divided by 500, 5.7. So yeah, it makes more sense to sell the 192 and buy the 197. Maybe we'll do that now. 192, 197. Distance is 5. All right. I'm going to be really short call heavy here. Sell 1 December expiration 192 call, and buy 1 December expiration 197 call. Limit credit, we'll go with 67. Okay. Preview this, double check the ticket. Sell 1 192 call to open, and buy 1 197 call to open. Receive a credit of 67. We'll go ahead and send that out. I'll probably get filled. This one's very liquid. Actually, let's modify it to 69. See if we can get some more out of it. It's changed it to 68. Oh, yeah, 68's fine. We'll leave this open here. Let's move on. NVIDIA has earnings on the 21st. We're waiting for that one. That'll be next week. What day is the 21st? 21st is Tuesday. I actually won't be here. I'll be out of town next week. So you guys will have to do NVIDIA by yourself. Target, we already looked at Target. The TLT, I don't want to look at the TLT today. We look at it every day. Plug, nope. AI, we looked at AI yesterday. We got that fireside chat coming up. Skip. The XBI, let's take a look at that one. On the put side, if you sold the 67 and bought the 62, no, buy the 63. That's 59 minus 23 divided by 2 divided by 400, 4.5% on the put side. I'd skip that. On the call side, if you sold the 79, yeah, buy the 83. That's 64 minus 20 divided by 2 divided by 400. Only 5.5% there too. Not that great. We'll skip this one. End phase. Up again. ENPH. Up 7%. Very short call heavy. On the put side, 85 is a little close for comfort. And the 80's too far out. If you sold the 80 and bought the 75, 89 minus 49 divided by 2 divided by 500. Only 4% there on the put side. On the call side, if you sold the 115 and bought the 120, it's 146 minus 93 divided by 2 divided by 500. 5.3% on the call side. We'll move on. Next page. Walmart earnings are tomorrow before they open, so we'll follow up with Walmart tomorrow morning. Hopefully there's some good movement like in Target. Pfizer. On the 9th, there's the 65th annual meeting of the American Society of Hematology. Results of a phase 3 basis trial. PFE. Nah. It's not be worth it. Skip. $3 stock, $4 stock. Walgreens? Walgreens. No. Pass. TNA? No. VF Corp, we've already looked at. Lilly? We'll skip Lilly. The KRE, they were up big yesterday. Up another 2% today. I don't know if I trust these small banks. On the call side, you get paid for it though. You sold the 49 and bought the 52. $300 spread there. That's 46 minus 14 divided by 2 divided by 300. 5.3%. That's okay. Put side. You'd have to sell the 41 and buy the 38. 29 minus 9 divided by 2 divided by 300. 3.3%. Skip the put side. You don't get really paid that well on the call side. What's going on with this? Not filled yet? It's at the mark. Should get filled soon. Well, check it out. If the IWM position gets filled, 68 divided by 2, 34. So we'll set a buy to close order. Good till canceled limit debit for 34 cents. Okay? That's if it gets filled. It should get filled any second now. Hey, wait for a couple seconds here to see if it gets filled. No. All right, well, we're going to call it for today. Like I said, if this position does get filled, set a buy to close order limit, 34 cents. Good till cancel. All right? Thanks so much for watching, everyone. Hope you enjoyed. Tune in every morning at 7:15 a.m. on the West Coast, 10:15 a.m. on the East Coast. We go live every morning trading options. Subscribe, like, tune in every morning, and also tell your friends who are trading options to tune in together. We'll all trade options together. Cool. See you tomorrow morning. Have a good one.